that it will change the implementation approach or timing. So we're hoping to publish the final analysis of the public comment sometime in early 2019. So with that, I'll just go through and provide a high-level overview of each of the 3 phases. So the first phase is we're going to be implementing changes to our proprietary format to get us ready to go to ISO. So our phase 1 will be implemented in November of 2020. It will be a big bang implementation, meaning that we'll be migrating all of our customers on the same cutover date. And we're aligning the date to the same date that SWIFT will be making its changes for their MT 2020 release. And so with this change, we're making changes to our proprietary format. We're doing a lot of cleanup. We're removing a lot of obsolete fields. We're putting in some tighter edits. And we're really trying to align our format more closely to the SWIFT MT format. And doing this will make the migration in phase 2 much easier. So phase 2, this we're calling our ISO like-for-like phase. And like-for-like means that during this period, it's going to be an 18-month migration period. We're going to be migrating our customers to sending and receiving ISO messages, but the messages are going to be limited to the fields and character lengths that we support today in our proprietary format. It's the term like for like. So even though it is ISO, it's going to be very similar to our legacy format. And the reason that we're doing it this way is because we're going to be migrating our customers in waves over the 18 months. So as an example, we would pick, one weekend where we would do a certain group of customers, and then the next weekend we'll do another group of customers, and so on and so forth. And doing it this way, as customers migrate, they can start sending and receiving the ISO like-for-like messages, and they don't have to figure out what the receiver can receive. The Fed will figure that out. So as a customer starts sending ISO, they send all of their messages in ISO. The Fed will then figure out, is the receiver, have they already converted to ISO? If so, we will just pass on the message. If the receiver is still on the legacy format, we will then convert the ISO message to the legacy format to deliver to the receiver. So keeping the ISO messages like for like, it will make that translation more seamless, where we, the Fed, don't have to truncate any data. So and it also, the benefit of this approach allows, if there's any one customer, once they convert to sending the ISO messages, if they experience a problem and they want to convert back to legacy format, they can do that without disrupting the rest of the market. In fact, other market participants wouldn't need to know if a customer had to do that. So this really reduces risk for us and provides a lot of flexibility in really managing the migration of thousands of banks from our legacy proprietary format to the ISO messages. After we complete this phase 2 18-month migration, we plan to have a stability period where we feel confident that everyone is sending and receiving the like-for-like messages with no issues and no one needs to fall back to the legacy format. And then we will implement our final phase, which is our phase 3. And this is when we will enable all participants to start sending the fully enhanced ISO messages that has, they'll have new fields that we don't support today, new parties in the message, and all of the more rich data that ISO provides will be offered in our phase 3. is an explanation of the overall implementation approach. And the timing for that phase 3 is November of 2023.
So I think if we look at that, that's covering the basics, moving the move to ISO and so its rich capabilities. Turn over to Cyrus. If we look at from an organizational point of view, the standards transition is one thing, but what do banks have to worry about from the point of view in terms of how they're structured or considerations there? Can you give us an insight there?
Absolutely, thank you, and that was a great kind of overall summary, I think, of the program just earlier. There's a number of considerations here for a organized financial institution. Some of those are compliance, legal, and privacy related, and then there's elements that obviously technology, operational, and then new opportunity for the participants in the ecosystem. So if I start with maybe some of the organizational and compliance related things, obviously this is a very far-reaching style of program. Many countries have attempted payments modernization, some more successfully than others, and those that have been more successful recognise the extent to which these changes actually impact broadly across a financial institution. And what I mean by that is sometimes we focus a little bit too much on the basic payment processing, and sometimes we focus on the fact that we're talking about a new message standard, but in reality the message standard itself is not the most complicated part. And the analogy that I use here for folk be a little bit less familiar, and I apologise for those who are very close to ISO 20022 and its capability, is much like the mail system, envelopes, and as they go within them. Think of the format of ISO 20022 very much as the envelope, right? So that is not perfectly predefined. There are different sizes of envelope, but you always know roughly where to put a zip code, and that's relatively straightforward for addresses to be read by automatic machines that then sort the letters and envelopes into appropriate destinations in an automatic fashion. The payload, though, that goes inside the envelope, the letter, can vary, and ultimately is not really relevant to the communication mechanism, but it is important for the financial institution that's reading that letter to kind of blend the two, the analogy with the reality. And that is something that is often not perfectly thought through, the implications of what that additional data means. Has implications on history policy, but also privacy, AML, sanctions, and even fraud within a financial institution. And there's not necessarily a defined, here's what the impact is going to be. But for example, when we start doing ISO 20022 modernization in the real-time payment space, the addition of rich data to a payment message actually causes both an opportunity for additional corruption and exploitation from a fraud perspective, but on the flip side, it also gives more information for our internal fraud and financial crime departments to enhance their automatic and AI-enabled fraud detection and monitoring capabilities. So there's, pros and cons to both of these. The other part, to continue the analogy of the mail system that is sometimes forgotten as part of large-scale payments transformation, is the actual mail system behind it. So I talked about the envelope, I talked about the payload or the letter, but the ISO 20022 standard is more than just the shape and size of the envelope. It's also about how we send and receive those messages. It's generally called user guidelines or implementation guidelines, which basically means the behaviour of a financial institution when it receives and needs to send a transaction. And it's quite different in different jurisdictions, but in terms of intricacies and technicalities, but effectively it's roughly the same as what we call a question and answer type response. Obviously, different implementations, be it real-time or wire, have all kinds of different business requirements that surround them, but when you drill down to it, it's not actually predominantly or massively different. Some of the considerations for a financial institution as we move on through kind of the topic of compliance would certainly be to our strategy and timeline within the bank. So we live in a time where a lot of financial institutions are certainly undergoing massive change. We're talking, a number of our clients about things like payment hub implementations, core banking replacements, fintech investment, and therefore adoption of new products. This is, a very large-scale change within a bank and can touch many parts of it. So you need to align this type of program and the extensiveness of it with other strategic initiatives within an institution. And that's, a fairly obvious statement, but when coupled with the fact that you're touching parts of a bank that you may not really necessarily expect to until you get into the detail, that becomes a much more important application, but also an opportunity. And that leads me to the opportunity discussion. The opportunity in this space is, yes, this is, could be considered from a business case perspective predominantly a compliance program, and that's absolutely fine. However, there are both intrinsic benefits to the product and to the customer based on the compliance mandate, but it also enables, it's very much an enabling capability or a platform for change for institutions who want to actually enhance their products. The additional ISO 20022 data, plus the, what I describe very colloquially as the more chatty interaction between different parties of a transaction, i.e., receiving responses in close to real time when you actually send out a wire transaction, and not just technology-based acknowledgement messages, but actually real business acknowledgement messages, means you can engage with your customer much better. So, for example, when I send a wire transaction today, I get two things that aren't an ideal experience. One is lack of transparency of fees sometimes, and two is a response in short order to the success and delivery of that transaction. Depending on how a solution is implemented, truly ISO 20022 and a new process flow actually enables those things, and a bank can choose to expose that to its customers and actually build better products and services on top of their existing high-value platforms. That leads me to final consideration in the opportunity space is about customer engagement. Again, while this might be treated as somewhat of an internal bank program of work, I think especially with the phase 2 we talked about a little bit earlier, engaging with your customers upfront is really key. So they're both educated about the changes that are likely to be coming down the track, because it does require obviously changes inside their financial systems, their banking interaction platforms, so things like their ERP systems. It certainly does present an opportunity, but that opportunity comes at the cost of investment in terms of upgrading their systems. Now, we talked about translation layers a few moments ago, and those capabilities certainly can exist, but that might be interim solutions because the translation layer, in this case between a customer and a financial institution, might reduce some of that additional value you're able to provide to your customer if you're basically stripping out the additional data that's provided by ISO 20022 and delivering it separate to the payment, because one of the key parts of this is delivering additional data with payment. You can talk to global treasurers until you're blue in the face about giving them money in their cash account faster. Many actually struggle with that concept. When faster payments was implemented in the UK, actually a number of banks received requests from their very high volume transaction corporate entities, corporate customers, saying you need to slow down the inflow of payments into my account because I can't reconcile them because I'm not getting the data with payment. Now, in a wire environment, we may not see that, high volume, high throughput, scenario, but you will have the same challenge around customers needing data to travel with the payment, and that's one of the true benefits of ISO 20022, but you need to engage your customers up front, and there's some stories we can talk about that. I think that covers mostly kind of the compliance and opportunity spaces. There's obviously operational change as well, so beyond just the obvious technology, and I've talked about the extent of that technology change, there's business process change here. So in addition to simply technology change, there's business processes that support these systems and services that may require change, both operational, internal, and customer-facing. The final piece here, organisationally, is very delivery-focused, so getting a little bit tactical now. These kind of implementations, while common across the world, we all know that payments is a reasonably small niche industry. What I mean by that is resource scarcity for the proper expertise to execute and drive this change is certainly a problem, with many different initiatives happening around the globe over. And so, forward planning with your vendors and forward planning with your internal payments executives and their delivery teams, the right expertise ready and on hand is critical, because we are generally going to be touching aging and heavily interconnected payment systems today that deliver wire transfers if you're a legacy institution. And as a result, you're going to need the correct partners and the correct expertise within your organization to protect yourself from a delivery risk associated with touching the payments environment. The very final piece I'll leave you with, as kind of introductory comment, is really about the concept of payment silos. So this is an opportunity for financial institutions to actually start to consider the concept of a payment is a payment is a payment. And what do I mean by that? That customers traditionally shouldn't really be too concerned about whether a transaction is a wire transaction, a real-time transaction, or a batch transaction. They should be talking about things like we're concerned about cost, speed, data, requests for pay capability in certain scenarios, not so much in the wire environment. Transparency of fee, for example, in the wire environment is probably a better example. And these are really business capabilities and things we can sell to customers rather than telling them you need to be intricately involved in the concepts of batch payments or wire payments. What that means is this kind of change presents an opportunity for a bank to break down some of those silos, consolidate its payment processing capability, concepts of payment hubs and payment service hubs and engines. Certainly, catalytically started from transformational programs of work like this, and it allows you to break down those silos quite holistically. And the reason why this kind of initiative is really good for that is not just because it touches all edges of a payment, but because ISO20022 is becoming the predominant standard for both retail and commercial payments. We're seeing it in TCS's real-time payment environment in the US. We're seeing it in now a wire environment. We've had conversations in industry about what does our batch environment look like in the future, and does it maybe need to be modernized to the consistent ISO20022 standard. And that's one I'd love to debate with folks as to the value of that. But the reality is that this does therefore present an opportunity for more consolidation and consistency within architecture as well as operations to move from independent payment silos to centralized kind of processing regardless of or agnostic of payment type. So I think it's good food for thought to get us started.
Great. No, thank you very much, Cyrus, to give us sort of organizational considerations and some of the opportunity, I think, changing that from a compliance project into looking how you might restructure your product offerings or enhance your product offerings on that. I want to turn to Stephen now. You've been implementing payment systems for quite some time, and what are the technical considerations with standing of the change to ISO? What do if we get down to the nitty-gritty? What do people need to be considering when they're looking at these projects?
All right, Trevor. So what's the needs of FIs? Then they need to look at their payment systems, their payment system ecosystem holistically. So it's one thing to have a payment system that is in compliance with the new Fedwire format. That system frequently relies on data from other systems. For example, DDA systems for proper name and address, balance information, post entries, things of that nature. Another common area that payment systems integrate with is initiation systems. So there's online banking and commercial systems and so forth that feed payment instructions into the system, the payment hub or the Fedwire system or what have you that will eventually execute those Fedwires. If I start exploring their project plan and all the tasks to make this so, they'll need to look at all this data that's passed between these systems to support the ability for the payment system to create a proper Fedwire. And that would include looking at things like the changing data elements to make sure that those supporting systems can support the newly formatted fields, that they can adhere to the tighter controls and content of those fields. Also, once full ISO is in effect, some of these fields, like the address fields, the name address fields, some of those fields are longer. And we will have to make sure that all the systems that are around the payment system could accommodate those types of changes.
Steve, in the sort of fields, and some specific examples, so the name and address, or I guess the structured nature. Are there examples there?
In the ISO world, there's going to be a number of things. So some of the fields that we have in today's FAME format are going away. The community, when they start doing their upgrades, they're going to have to look at those things to make sure that those fields are accommodated, that they're going away, that data is accommodated elsewhere in the payment messages. Simple things like the CTP and CTR type payments, so it's going to all come down to CTP. So if initiation systems send something, some initiation systems send instructions already in a Fed-like format, and they might have a data entry for a CTR type payment. Necessarily a showstopper, but the bank has to be aware of that and make the appropriate accommodations to either have the payment system change that to a CTP, or have the system that's initiating those payment instructions edited so that it does now adhere to the new formats. You mentioned name and address. That's a great example. Right now, for names and addresses, there's a lot of there's strange in certain fields for, say, 3 lines of 35 characters, that nature. It's all going to be opened up with the structured addresses, and what financial institutions are going to need to do is to make sure that all the systems that participate in the payment ecosystem are to support those big formats.
Okay, from in terms of the nature or the standards, how far apart are the existing legacy formats and ISO in terms of how the organization, what they call things, what screens are labeled? Is that a big concern of you when you look at the ISO changes?
So there are some new parties, things like ultimate debtor, ultimate creditor, that will exist in the full ISO world that don't exist in FAME world. So the financial institutions are going to have to see what that means, and do they need to make their system support extra to accommodate those parties, for example.
And this is Gina. I'll just add some other examples. So the ISO terminology for all of the fields is different than the terminology used in our legacy format. So all of the field names are changing, and a good example is that today we have a field called originator and beneficiary. In ISO terminology, the originator is called the debtor, and the beneficiary is called the creditor. Likewise, another terminology change, like all of the different banks that could be in a payment message. In legacy, we call them, they're different financial institutions. So originators, financial institution, intermediary financial institution, beneficiary financial institution. In ISO, all of those parties are called agents. So there is different terminology, and as a result of the different terminology, it actually means something. There's a legally, according to U.S. funds transfer law, the terms mean something. So our legal is going to have to put in an appendix to our operating circular to describe that when we're talking about the ISO terminology, even though we're using the term debtor, according to U.S. funds transfer law, we really mean originator. So we are going to have to be making changes like that to clarify the new terminology.
Like not necessarily from a technology consideration, but from a legal consideration, financial institutions have wire agreements with their current customers and their commercial arrangements with their larger commercial customers. So again, although not a technical consideration, those facts, legal blurbs on the disclaimers and so forth are written will mostly have to be revised to reflect this new terminology.
So, underscores the, legal, operational, organizational change nature of, what is fundamentally a, technical standards change, which is going to have to, involve people who aren't, in understanding terminology for a brand new standard, and that's going to take time for the organization to upskill in that respect. So that's a very important point to draw out from the impact of the project. So just want to come back to you in terms of, from the Fed's perspective, what are the do's and don'ts when we look at the phases? What should a bank be thinking or about as the change happens?
Really, the first do for any bank is to, first of all, make sure you're paying attention to all of the communications from the Fed, because we've been sending lots and lots of communications. So number one is pay attention to the communications. Make sure, take a look at, how do you access Fedwire? Are you using a vendor? Are you doing your own programming? Is it a combination of both? And then you're really going to have to analyze the changes that you're going to have to make. And, if you rely on a vendor, you're going to have to work closely with your vendor and, look at your vendor schedule and, when are they going to make the changes available for testing and things like that. The Fed is going to be publishing our testing strategy in January. So we'll be publishing the timing of when we're going to be making our test environment available and what our requirements are going to be. We're going to have mandatory testing for certain types of customers in both our test environment as well as our production environment. So we'll be explaining, how all that's going to work. And because of the multi-year nature of the project, you're really going to, I think a good best practice would be for banks to form a project team of people that can be focused on this project for the next 5 years, basically, because one phase feeds into the next phase. And, so to have the continuity of a project team working on it, which can be difficult, but I think that would be a best practice to ensure that, the project runs smoothly and on schedule. And you think it's going to be, really, it's really going to be a big effort for banks and vendors, and, making sure you do thorough testing, and it's going to be a big education, event for everyone, and just making sure you assemble the right team to focus on the project.
It starts because those dates are coming up quite. They'll be here before you know it. So, still sort of staying with you, Gina, what are the consequences if you don't do something as a bank, if you miss the deadlines, or what are the consequences of not migrating or not moving over when everybody else is?
Really, the worst consequence, of course, is not being able to process your Fedwire funds transfers, because your system doesn't work and you can't, we're rejecting your messages because you haven't made the proper changes. So that's the worst consequence. And also, to be clear, our Phase 1 and our Phase 3, those are big bang, flash cutovers. So everyone is going to have to migrate and be ready on the same day. And so, banks are really going to have to be focused on preparing for this flash cutover. Whereas in phase 2, there will at least be this 18-month period for banks to more or less sign up for when they want to cut over in the 18-month period. But I think we're going to be trying to think of creative ways to encourage banks to stick to the 18-month schedule so that we don't have to keep delaying that. So we haven't really thought through exactly what the consequence will be for delaying your implementation in that phase 2, but there probably will be something that we'll be doing to try to encourage banks to meet those deadlines.
So you're trying to find a little bit of a carrot and a stick approach to make sure everybody doesn't leave it till the very last window in the 18-month cutover period.
Yes, and also with the testing for all of the phases, we will have mandated testing. So we will be requiring banks to do the testing and complete a certification script. And so their consequences would be if banks aren't signing up to do the testing and they're not completing it, there will be some sort of escalation process of us trying to escalate the issue with each organization to ensure that banks are prepared, because really the most dire consequence is if you don't make the changes on time and if you don't make them correctly, you won't be able to process your wire transfers. Even though we have our offline telephone service can't handle large volumes. So that really is not a backup for not meeting the deadlines for this project.
Okay, so it is a drop dead date for the means to comply. So, so moving over to, I guess, the opportunity side of the equation here. Is there more to be expected? ISO is being used in a number of areas, and what are the benefits from your point of view when you look at the systems and how banks are re-engineering them?
I think there's going to be a number of benefits. First and most obviously is the world of banking is changing to ISO and ISO-like formats. So with the Fed changing to the ISO format, it better allows U.S. financial institutions, especially those with international operations, great with like their FX partners and their correspondent partner systems that are already on ISO or going to ISO 20022 based systems. All in the United States. As you know, the new clearing, the clearinghouse real-time payment, is all natively ISO 20022. So just for those two reasons alone, since so much of the rest of the infrastructure is already going to ISO 20022, with the Fedwire system going there, it just kind of brings everything to a set standard. So there will certainly be benefits there. One of the benefits that will occur is once we are on the ISO and we could use the extended ISO fields, banks will to use that extended data to provide more value and product offerings to their customers. Since the fields are larger, there's potentially more data that the bank could decide on. They better process the wires, provide their customers with better service, and of course, since the data is larger data, more lengthy data, give more complete and accurate information that than had been sometimes provided in the past.
Actually, just a question coming in on that front, and sort of a question for Tina. In terms of the extended remittance data, is it going to be limited to the 140 characters as in the standard SWIFT MT, or is it, in the final, in the third phase, is it going to be, supporting larger payloads than that?
So right now in today's world, we do support up to 9,000 characters for either unstructured, meaning free text, remittance data, or structured data, meaning putting the remittance data into specific fields. So when we go to phase 1, we're actually going to reduce the unstructured option. So we're no longer going to support 9,000 characters of free text. We are going to limit that to 140 characters. And the reason that we're doing that is, number one, the 9,000 characters is not really being used today. So none is really depending on it today. And number two, we worked with a group called the High Value Payments Plus Group. It's a group that's SWIFT organized, and it has representatives from other market infrastructures around the world and global banks. And we came up with some best practices for implementing ISO messages. And the group felt that a best practice is to not allow a lot of this unstructured free text type of remittance information. Rather, it makes more sense to encourage everyone to start using this structured option. So that is why we're going to reduce what we're allowing for unstructured from 9,000 to 140 characters. We'll still keep 9,000 characters for the structured remittance. And also it is really not being used. We've literally had, I just checked this, we had 6 messages this year that had any form of structured remittance, and it was nowhere near the 9,000 characters. So, in the future, of course, if this really picks up and it's used, and, we're thinking there's a possibility that with the migration to ISO, banks will make the investments necessary to start, providing like a front end to their corporate clients to start including the extended remittance information in the wire payments. And so if the usage picks up and if it turns out that 9,000 characters is insufficient, of course we would consider increasing it. But for now, at least even through phase 3, we will not provide more than the 9,000 characters for the structured remittance.
Okay. Now, Cyrus, sort of going, do you see other markets? What's the experience been in the remittance and being able to provide that value? The more the increased data capacity of the payload. Are there any use cases that are taking off, or examples you could highlight there?
Yeah, absolutely. And I might go a little bit broader than just a high-value or wire platform, because additional remittance data and remittance information is present in multiple different payment type systems. And certainly we've talked a lot about the core message elements, which is fantastic that we make those globally consistent as well as consistent across processing engines for the type of consolidation I talked about earlier. But the opportunity is most definitely in that remittance data, and I certainly echo Gina's comment that not a lot of people are using it, and that's actually, I guess, because there's no consistent use case or product for use that structured data in many different industries. However, we are seeing, especially with the advance and the initiative around real-time payments, so if I look at SEPA as a pretty good example of that, both the batch and SEPA instant environments, we're seeing more of a use of the remittance data, as well as, frankly, some of the supply chain fields or fields used for supply chain management certainly is the biggest opportunity. So if I talk about, for example, a very, very large manufacturer in Europe, as a result is obviously multiple countries. It has the advantage of being cross-border as well. But the advantage here of carrying additional data is often in the reconciliation space initially, and then secondarily, as a second option, in the supply chain management space. You can think about having the ability to track incoming inventory that's required for manufacturing before it goes outside as a wholesale distribution, and you can actually track using the data contained within the payment. Inputs, use that as an input into some of your supply chain, more advanced and automated supply chain management systems. Volvo is the example I'm referring to in Europe, and they did have a number of challenges implementing ISO20022 in their batch environment in particular, and that was because it was not perfectly understood how we would utilize, and the defined behavior was not necessarily crystal clear for some of the ISO20022 messaging. So one of the great learnings there is to get that nailed down to an extent before we begin implementation at corporate. But long story short, once that was kind of created and once that was efficiently made consistent, supply chain management was something where they got to take a lot of definitely manual processing, but more importantly for them was automation outside of business hours, automation without manual processing for some of the supply chain tools. So when a payment comes in for a particular product or a particular manufactured item, they can automate the distribution of that based on receiving cash because they have the required information in the payment to actually trigger an event in another system which pushes effectively a purchase order and invoice through to completion, and then shipping occurs in kind of an automated fashion. Some of the other advantages of additional extended remittance information is definitely around analytics. So for banks and their corporate customers can generate greater insights when they have data attached to a payment. So having, again, cash in your account is not necessarily valuable, but if you can see that money is generally associated with late payments from a particular vendor, you can perform analytics on that financial ecosystem of software, as opposed to just deeper within payables and receivables applications. And the point here is that banks can begin to offer that as a service to their customers, i.e. identifying eventually late payers and recommending discounting models for them, for example. So now we're starting to blur the lines between where a bank is purely traditional financial transaction service provider and really exposing us to what I often describe as the broader business transaction. So no one really makes a payment for the sake of making a payment. They do it because there's an underlying business transaction occurring. And if we can expose the information for that, it's beneficial both for the financial institution providing it, but also for the corporate customer, so they can leverage it in a consolidated fashion, in a more integrated fashion, rather than having manual reconciliation required. Or obviously cost saving associated with that, and I've talked a bit about the technology consolidation for that, but then there's straight through processing cost savings available as well. The final part that I might add here is around end-to-end payment tracking. So structured messages will certainly enable banks to provide more in-depth and certainly more responsive, maybe not real-time, but responsive payment tracking and reporting services to their customers, so you can actually make decisions on that information, enhancing the ability for a corporate customer to actually leverage the capital within their cash accounts, but they can also make decisions like pushing a product out the door, or in a financial environment. Certainly we've talked with folks like Deutsche Bank of the ability for wire payment notification and remittance information to be transmitted faster, and then they can execute deals in a more expedient fashion. Certainly we've heard stories of they generally might do that based on credit or risk today, because they just don't have that information, and it's so valuable to them to be able to move fast in their particular market, as you can imagine. They do it based on risk for a particular customer. To have this end-to-end payment tracking in a much faster and more accessible format, then they would actually be able to change the way they do business in effect, and extend credit lines of credit faster. They'd be able to perform deals and execute trades faster for a broader set of customers, not just the ones they're willing to take risk on. So those are kind of some of the big value adds in specific examples.
The payments platform to build capabilities and services on the back of, and I think a lot of banks are limited by back ends. And I think on sort of look at that sort of thread, I think we are faced with some. Not all payment systems are built to handle ISO. ISO wasn't around when most of some payment systems were built. So Steve, if you were working with a bank looking to upgrade their legacy system handle ISO, what would sort of the big thing be talking to them about or advising them on?
there's certainly a couple things to look at. So ideally, you want to work with a vendor or consultant that works as a partner and has understanding of the coming changes and how ISO works and can be advisory. So to not move the bank to get the format exactly straight, but make sure that all those changes work throughout the bank's payment ecosystem. Also looking for, if a financial institution is looking to purchase a solution or upgrade to a new solution, look at a solution that already has some sort of ISO20022 database model, and also that their technology stack is relatively new. And that's important because you don't want to invest in something a little older, something that might have security or compliance risks. You want to invest in new technology that could handle today's needs and potentially the future needs that are going to arise. Of course, for any financial institution, you want to pick a technology stack that works for your organization. So if you're a unit app, for a very simple example, you don't want to invest in a system that's based on the mainframe, for example, because that would be like a net new type of technology to bring into your organization. Some banks that might not want to deal with this type of technology decisioning at all, they might choose to move the payment system to an outsourced or a type model. So these are considerations as well. And lastly, I would want to work with a vendor or consultants that have experience with ISO clearing. So a lot of the world has already moved to ISO, so there are people and vendors out there that are experienced in this area, have done this type of work before. So it's always helpful to work with a team that has done this type of thing before. And lastly, I would just like to note that the larger banks that have same complex needs than most, like say they're both CHIPS and Fed, or they're a bank holding system with multiple Fed solutions operate in their overall operations area. You want to work with consultants and vendors that could help you move all those complicated pieces in lockstep so that all your systems convert the same to the ISO at the same time. Just sounds like a easier way to move the bank's system to ISO 20022 format.
Great. Yeah, a lot of I think modernization opportunities present themselves when you start looking at the project. So I think that's some advice. So I think just in terms of wrapping up, I was wondering if there's any comments from the panelists, any last minute thoughts from you, Gina, Cyrus, or Stephen? I will take that as your wisdom has been delivered in your previous comments. So I'd probably now I would like to bring the panel to a close and thank you for your attention and your questions. I'd like to thank the panel for their knowledge and preparations. We'd like to continue the conversation about the planning about this topic, and we have prepared a white paper to be used in your ISO 20022 planning, and that paper will be made available. It's available on the Pfizer website at the moment, and we'll send a link through in a follow-up email to all the people who have registered on this call. So with that, I'd like to thank you for your attention. Thank panelists again for your comments. We look forward to talking to you more about this topic, so please do reach out to any one of the panelists or ourselves, and I look forward to delivering that white paper to summarizing some of our